Hello again, everybody. It's Harry Boxer, the technical trader from thetechtrader.com, a site of day traders and swing traders. And I'm one of the oldest sites on the internet. Started back in 2001. Now, about to have our 25th anniversary. I've been told one of the first sites on the internet that does that as a trading room. We basically are pure technical analysts. We pay attention to fundamentals in the morning. But I'm not here for a major presentation. I just want you to know that if you really want to see what we're doing, you can come on for 2 weeks for free at any time with no credit card. Just click on start a free trial. Put all your information in, no credit card necessary, and we'll be good to go. Let me I gotta share my screen just a second. I want to get it to another screen. And then I'll take your questions. Folks, please post any symbols that you want. I'm a technical analyst with over 60 years of experience, and I like to be able to, there's my charts. I like to be able to go over any charts you like, but until I get some questions going, I just want to show you some of the stocks we traded in one of the worst days we've had in a while. We traded Fastly, which is the market winner of the day, in my opinion. I saw the pre-market coil develop, and when it popped at the opening, we went long. No, that's not true. I remember now this is a pre-market trade. So when it coiled pre-market at around 12 3/4, I first put it out. In the pre-market, it popped to almost 14. Nice trade, and it's in and of itself, but it never broke support, and I told people to hold on. In the morning, it exploded, and I told them to sell half their positions around 15.5 and hold for some more. It formed a beautiful bull coil, ran up, formed a flag, and just channeled up all day. When it reached 17 3/4, I said to everybody, raise your stops to 17.30 and 16.65. Those are my two levels. I wanted half at each. So your average out on this one was about 17.15. Currently 16.11 on a pullback, and still looks fantastic. That's the kind of stuff we do. We trade 1 minute intraday charts. I'm a big believer in pattern recognition, that charts form the same patterns at all time frames, and that they can be readable and usable for trading. I always go with volume as well. It's all about price and volume. I think a stock that moves price-wise with no volume is dangerous. A stock that has heavy volume and doesn't move is useless unless it shows you some accumulation going on. But for the most part, this is one trade we had today. Another one was Cognex, similar pattern, pre-market coil. We had a swing day trade on it early. You had to be in my site early every morning. Folks, I get up at 4 a.m. in Los Angeles, where I am, and I'm on the site immediately. And for an hour and a half, I'm pouring through hundreds of charts and coming up with watch lists and focus lists, and even putting out a few pre-market buys, usually less than half a dozen. There was a breakout that occurred right at the opening. The rest of the day it coiled, but it never looked back in terms of giving back a lot. This stock actually held up with a gain of $16, closed 59 up 1560, 1597 on 12.4 million. By the way, Fastly traded 110 million. Another big winner for us was Sphere. That's the brand, that big entertainment company in Las Vegas and other places with that big Sphere. After I saw a pop and wedge in the morning, the first pullback was an entry up for us. We paid 104. By the opening and shortly thereafter, it exploded to 114. My targets were 108, 111, 12. I then raised it to 115. We got up to 114 and change. For 114.65. Then for a couple, 3 hours, it formed a coil, but never broke down while the market was pulling back and even went higher nearing the close. So spectacular performance for this stock, 21 points on a day when the market's lousy. This is what I'm talking about. If you're in the right stocks with the right formations and you know how to read them and use them, that's what we do at thetechtrader.com. Please come in and check us out. Spend a couple of weeks with us. You probably pay for 1 or 2 years worth of subscription just by the amount of money you can make during the free trial. I do have some questions here, so let's get started. And please, folks, if you have any symbols you want me to run by, I'll give you short, intermediate, long-term updates and support, resistance, and targets. So I'm going to go off with SUPN. And this is from Matt. Nice little long-term chart. I know this company well. On a long-term basis, you can see it's held that trend line for 10 years, 13 years. After the V bottom, it's formed an inverse head and shoulders. Yes, I remember this one. We put a buy on it here, but it was pretty choppy. And eventually made it up to, at that time, 34 from where I gave it to you guys, to my people at 26 and three quarters. It was choppy for years and then came down and backed up again. But most recently, and that's the thing, that's the key you're most interested in. Only a long-term trend line. Current pattern looks like this. Long-term trend looks like that. Lateral price resistance right there. So at least the first target, if the market cooperates, is going to be about 10 points from here, Matt. I would look for maybe less than that. 57 is my target. Beyond that, 63. Scrolling in close, you'll see that there's a platform here over the last month, and this is a daily chart that shows key support at 47. I would stop there. Today was a nasty engulfing negative reversal day. Now, I don't know if you're interested in short or long, but the bottom line is it went through resistance. When a stock does that and doesn't follow through and that suddenly reverses and closes that negatively, losing about 4 points off its high and closing at the session low, very bad sign. I wouldn't be shocked to see the stock make a run down towards 47, 48 and test support. But you can't let it go below 47 because we're looking at 44 and 40 after that. Hope that helps, Matt. If there's any further questions from anybody, please post them. Now for Kumar, Datadog. Datadog is in a distinct downtrend. I told this to my people the other day when it ran up. I said, it hasn't broken out yet. Now it looks like it had a breakaway gap. What's going to be important, Kumar, if you drill down to an hourly chart, you'll see what I mean. Anytime a stock is in a downtrend, you got to wait for the breakout. The positive part. After breaking out on an hourly chart, it's pulled back down and consolidated above the moving averages, but not on the daily. And yes, it's doing it on daily too. That's a good sign. I would do this, Kumar. If you're in it, you probably want to stop under 120.21. I would, if below that, it'll fill the gap or come down to the channel bottom or worse. So you can't take a shot with this until and if it takes out today's high. 133.35 there, 133.44 there, and the declining top sign and the 50-day. So there's 3 or 4 reasons to not get too ahead of yourself in this one until it shows it can break out. If it does break out, my target is 143.45. And then possibilities that this can do, I would say 143.45 and 150.52. Those are my upside targets, but anticipating the big breakout, you can't do that. Unless you're in a stock, you anticipate a breakout, it often goes against you. That's all I got to say. And the good part is a breakout of 3 days in a row here with a gap above the moving averages, that's bullish. The fact that it's holding for 2 days, that's bullish. But a breakdown underneath the 3-day lows could send us reeling. Be very careful with it. You're not in it? Okay. Well, if you're watching it, then what you want to do, Kumar, is wait for a big move over 133.5, especially if there's volume, then you might start to see the thing really make a bigger move. That's my take on Datadog. The other one you had was, let's see, was OKTA. Okta. Yeah, today was not good. Not good. This is a negative chart. On the plus side, might be forming a base pattern. On the negative side, today's action, after breaking out of a declining channel, it went to the moving averages and failed miserably. And in fact, it reversed from 89 to 83 and change, finished 84.91, down 327. Dangerous chart. I would wait on this one too until the price volume surge comes in over 90. Then maybe you could look at mid 90s and high 90s. Not the best of charts. So Mike Bryden wants to know about gold and silver. Like the SLV is in danger. Now we traded it for the bounce. I told everybody yesterday, stay away from this. I said there's a fifth wave coming. It came today. When a stock does this, and I told everyone to get out of silver and gold when it spiked up and blew off. This day, right there, a couple of days before the high when it traded 393 million shares. I never heard of that, but it did it in one day. And then it reversed on even bigger volume and bounced. So when it came down to the moving average started bouncing, we did a trade in here. And it worked out well. Went from like high 60s to 80. I think it was something like that. Anyway, if you draw the lines properly and you have a declining channel here, see it? Let's take out some noise. I call lines chart noise. Just so you can see it without the lines, I want to point this out. And this goes along with Bitcoin too. I can show you that later if you're interested. 100% massive major resistance is at 82.3 range on silver. Beyond that is a gap at 92. But this is a 1, 2, 3, 4 Elliott wave decline, followed by a fifth wave started today. Massive wave that saw a drop from 76 to 67 and change and finish at the lows for the day. I told everyone a couple of days ago I was expecting silver to go down to 63, 65 range there. You'll see that tomorrow morning likely. After the fifth wave down, is it a buy? If you're buying this at the fifth wave without waiting for the reversal, you're trying to catch a falling knife. The answer is maybe, but I'm a waiter and I wait for the setup. The setup is for a stock to show some signs of reversal with volume. One of the keys on this here, that it rallied for 3 days here and 4 days there and never had big volume like it did in here. It had more red bars down here. It's just negative technically. And if you're looking at GLD, it's the same thing. Not as bad. This is, and let me tell you what the negative is here. This is a massive reversal off a spike high that took this to 509. And in 2 days was trading at 422. So it lost like 90 points, 87 points. And then it rallied. Look at the low volume on the rally. Classic bear action is when any instrument comes down. Look, it had big volume on the upside, even bigger volume on the downside breakdown. What did it trade that day? 86 million, which is unheard of, all-time record volume, and a down day, breakaway down day. This rising wedge here, right to the apex of a rising wedge on low volume ebb. Call that a low volume ebb. It's just like the tide goes out in the ocean and stops for a second. It's called ebb tide, and then comes in. Same thing goes with stocks. I mean it. When it gets real quiet in a low volume ebb, and then all of a sudden the thrust comes downside this time. And the odds were 2 to 1 that this pattern is an ascending bear wedge because it comes off of a down move. It's a continuation pattern. Check this out. The measured move, as we know, is about 87 points. Take 87 points off a year, and you got 375.80. At the very least, it should come down to 4.25, and it may come down in this range down here. So both of these look horrendous. And if you're in them long, be very careful there, Michael. Now for Matt, AUPH. Another great looking biotech stock was on my hot list. I think this is on my top 26 list for the year, but it's breaking down. The biotech's LABD, I'm going to show you something. It's turning around. Look at today's action intraday. The last couple of days. It's firming. While the market, as the market goes down, the LABD got better, of course. But the problem is that today it didn't really react like the FAZ or the TZA. The ultra shorts of the market, the LABD didn't act as well, but it was up about 3.5% for an ETF. Let's go back to AUPH. Anytime a stock consolidates for a month or two, it starts to drift lower and takes out support. I'd have to call support right there at the very least. At 1435. Today it broke it and broke it firmly. Now it got down at 1360 and finished at 1431. So let's see the next couple of days happen. But secondary support is 13 and a quarter, and then it's Katie bar the door down back towards 10 or 11. This had a big run in the last year and a half. It's gone from 4 and change to 16, so nearly quadrupled. I would put a stop on this one under 13 and let her go if she breaks. ALB. That's for Pat. Pat B. Is that Pat Boone? Oh, I don't know if he's alive still. Anyway. Okay. Nice chart. You know what's forming? Check it out. That's a Head and Shoulders, folks, and it ain't pretty. Pat, be very careful. Left shoulder, head, and the right shoulder just formed and had a massive reversal. Massive. This is very bad. If the neckline is broken, the support is 155.6. If you take that out and it goes to 158.90, if tomorrow it cracks or it opens lower, it can start to fall away. I would say somewhere down about, well, the first key support for me is 142 to 138 in that zone, 140. And then if it breaks that, you're in big trouble. But let's not forget, always be aware of the perspective of where a stock has been and where it's going. In April, it was 49. By January, it was nearly 200. So let's say it went up fourfold, 300% in 9-10 months. I don't care if it's semiconductor or what, or chemicals, whatever it is. This is chemicals. That's a topping pattern. I would exit the stock. You can always re-enter. That was a bad day today. Got that, Pat? Be very, very careful with this. Rob wants to know about CIFR. Isn't that crypto? Yep, cipher mining. Well, it's holding up better than most in that group. But I'll tell you what, Rob. You see this angle here? That angle? And then a sideways coil with multiple bottoms here. 100% stop under 12.5. Now, you're still a ways to go. And what we're looking for is a breakout across 19 and 19.5 in that zone here. I want to see this trend line taken out, that zone of resistance. Once you do that, then maybe you're on your way to retesting the highs again. This is better than most, but tentative and dangerous with underlying technicals having turned neutral. That's a good thing when the stock's consolidating, but you don't want to see a breakdown, and you may want to consider exiting half your position and or stopping it tightly. Okay, so Kumar wants to know about Micron and Delta Airlines. Well, Micron's a great chart. What I really like at Kumar, what I really like is MUU. It's double leverage, and if you're going to go along with Micron, why pay 415 when you can pay 198 and buy twice as many shares and have better leverage? Plus, it's a double bull; it'll go twice as far if MU goes. But you have to put a stop right there. If this, after such a big run, if this thing comes down underneath here, put a fork in it. Stop at 150-51 range. I know where it is now. You can go into a 15-minute chart, you get a better feel for it. Right now, I'm not liking this. It looks toppy to me. So I would put, if I'm stopping it, under 192. I would stop half my position and probably the rest around 175. Very volatile stock. I'm sorry, that's MUU. You want MU. Well, let me give you numbers there. It's the same pattern, of course. MU support, either one under 410.11. That happens, you can start to see it plunge, especially if the market does what I think it might. In other words, I think we're not quite done. We have one more leg on the downside. Look, I'm hearing from some of my good, really bright technical buddies that they're thinking that this market is head faking everybody and has one more leg to go to the upside into the 7,100, 7,200 range. I don't know about that, but we'll see. On MU, stop is there, and the secondary stop is about 384.5. Long way from here. Delta Airlines. Beautiful chart, but not the last 2 days. You have to also put in perspective from the April low at 34 to 76, and more than doubled, and all-time highs. So when you get that kind of those numbers, they can be vulnerable. As you can see, the last 2 days were nasty. 100% stop under 65. Don't let it get underneath that. Under 65, it gets really ugly. Extension target might be 79.80. I would be careful with this one. Is there anyone else has a question for me on any charts? Please post your symbols. I'll be glad to give you my take. Rob wants to know about Red Cat. RCAT. This is one of my big swings this year because it broke out right there. I put a swing on it. Within 2 weeks, it went from 9.5 doubled to 17. What was it 1802? Double top there and rolled over. Right now, look, this is just one of those stocks that is extremely volatile. It was a phenomenal run there. And looking at what I consider support, right there. For me, I'm stopping under 1075.80 because it's vulnerable to 9.5 or even as low as 7.5. Can do it. It's done it before. What I need and what I'm looking for is a move over 14 to 14.15, 14.25 to get it going again. Then you'll test 17 again. Right now, it's betwixt and between. It does look like a wedge, which is bullish until it breaks down. It had a 1, 2, 3, 4 big 5-wave Elliott wave move, and now it's coming down choppy pattern. Market's putting pressure on a lot of stocks. AMD. I like to trade AMDL. I want to show you something on AMD. I used to love this stock, but right now I'm skeptical because after it came down with a triple bottom, it broke out, went right to the highs again, formed the triple top. They came right down to the lows again and bounced, even took it out slightly. But this held at the prior high back in here. And it's bounced, but it bounced right to the 50-day moving average. It also bounced to the long-term trend line that it broke. This is called the kiss back. That's a very negative pattern. Unless this gets going quickly and gets above 220, it could be vulnerable to a pullback to 191.2 again, and much worse than that. Careful with AMD. SSRM, better chart, but it's gold. I can't believe how well this is holding up. Relative strength is excellent compared to what a lot of gold stocks are doing. But 22 gets me out. 22. Stop under the double bottom, under the moving average, under the trend line. If it continues, you might see 30.31. Harmony is another gold miner. Actually, it's a silver miner. I don't know why they call it gold. It used to be silver for years. Anyway, maybe they do more gold than silver. Look at that chart. Now, that's pretty fantastic. But what do I see here? Left shoulder, hand, and right shoulder. All the gold stocks look toppy to me. The whole group looks dangerous. I'm stopping this under 19. It's right there. This could fall quickly. Test the trend line of 17 and a half. Be careful with this one. Very. You want to know about the S&P? Today was a nasty day. Very. And if it takes out the double bottom, we've completed the top. And if that happens, we may be headed down to 66.20 or 65.20. Those are two levels I'm watching. Well, Matt wants to know, was I all in on entry or do you add along the way? Never average down, always average up. That's where you make your real money. And Rob, I really like SYM, but it's forming a massive top pattern. You can hold it if you still own it or if you're thinking about it, but I would stop on the 53, 3.5. I just don't want to break the trend line and price support. So what we're looking for is to move back up to take out the recent high, which is around 64.5, to get it going back up to 72 and 85. Not a bad chart, but toppy looking, and any market, bear phase can send this thing reeling. You got to be careful. Good company, a very good company. Okay, so I think that's about it. There's a couple. LEU. Okay, this is an energy stock. Folks, I only have a couple of minutes, so if you want to get your symbols in, do it now. LEU. Yeah, very nasty bearish chart. Why do I say that? Well, we had a nice trend up out of a base, breaks out around the 60-65 range, and goes ballistic and spikes up to 460. So how about that? Five-fold increase in just in less than a year. But here's what happened: came down, bounced, and came down, but triple bottom taken out yesterday, follow through today. I wouldn't own the stock. Maybe down there 162, where I think that's where it's going. 162 is double bottom support. It might be triple bottom because if it comes down that far that fast, it'll likely bounce. The problem is if the bounce comes on weekly volume, it might be a 1, 2, 3, 4, and down we go into the 125 range. This is a vulnerable stock. See the volume picking up on the downside? Want to stay away from it. CMI, boy, is this impressive. For a stock to be looking like this in this market, having bounced like it did. I will say this though, Matt, be very careful. This is a nasty double top reversal day. See it? If I'm in the stock, I'm probably stopping it tightly because it's vulnerable down to 540.50. And if it breaks that, see you later. Don't forget how much it's come up. But we'd have a perspective. This has gone from 260 to over 600 and change. 260 to 618. Big move. And it only took 9-10 months. So you want to be first sign of a big negative reversal bar like that. At least the volume wasn't heavy, but that's not a good sign. And if it breaks down from here, it might drop quickly into the 550, 560 range. So we're about out of time. Is that right, David?
Yeah.
So I'm going to just invite everybody to come with me for 2 free weeks at thetechtrader.com. Just go to www.techtrader.com. Let me see if I can share that with you. You should see it now. So go to thetechtrader.com where you see my
okay. Yeah, now it's there.
Yeah, and just click on start a free trial and come in for 2 weeks for free, no credit card. What do you have to lose? Nothing. So folks, thanks for being here with me. I enjoyed helping you out. And I do that, by the way. I am on nonstop all day with doing live webinars and showing you my charts as we go along through the trading day. And I'm open to get private messages from anybody. And it's a great group of people that are willing to give you their time and mentor you if you need that kind of help. But for now, this is HB out. Have a great rest of the day, and I'll talk to you soon.